trading in commodities. Now in May, for May month, which is now expiring in the next 1 or 2 days, we have indicated the likely close to be around 16,400 to 16,200. This is what we had indicated. If you have a look at our webinar 1 month back, and we suggested that the low risk strategy as one butterfly 17,000, 16,600, 16,200 for around 52 rupees, for around 50 rupees or 52 rupees. திரும்பி ஆரம்பிக்கணுமா? Okay. So the strategy that we suggested was 17,000, 16,600 and 16,200. So right now it's going closer to 16,200. So we have got 3-4 days left. Today is Tuesday. So we will see on Thursday what is there, what is left. Suppose if there is a rally back above 16,400 or so, then probably we might have get into some sort of a profit mode. But the worst loss that is going to be is the premium that we have paid is around 52 rupees. So we are still having a probable loss of 52 rupees in case if the close is up below 16,200. Now it is only hovering around that price. It is just hovering around that price because 16,800, 17,000 and 16,800 should be fully at this point of time. 16,600, 16,200 should be fully funded. So it is, if it is above 16,200, then we should get into some profit mode. So we will still wait patiently for 2-3 days, because even if it goes to 16,300 or 350, there is a chance that we may end up with even 100 rupees profit. So let it be like this. So we will review, we will just have a look at it on Friday. So this is one strategy which is still yet to be decided on the P&L, because the market is closer to 16,200. We have also suggested that when it was 17,400 levels or so, suggested that you can buy a 17,000 put, and one, or probably you can go for a spread. So 17,700 to 16,600 put. And right now we should definitely be in a profit. So this is a 400 rupees full profit should come through mostly. So whatever premium that we paid at that point of time, so minus, definitely we are at a profit. So the amount of profit depends on the premium that we paid at that point of time. So one thing is, it is definitely a profitable thing. So this strategy, going for a the spread option between 17.7 and 16.6 has worked. Then we also looked at buy a 17,000 put, and we said you can even go for a 17,800 call selling, right? When it was 17,400. So this should be at a full profit, because that time there was not there wasn't any premium or a very small premium. And so 17,000 right now, it is around 16,200. So there's a big profit there. So it's like a futures, it has given full money from 17,000 to 16,200. So this way, we have got into whatever that we decided. I think probably they have all worked out. And mostly, we talked about, because when it was around 17,400 or so, we said that the premium there at that point of time, the call money option, call and put option at the money, was around 380 rupees or so. So we said you can factor 3 times as the high-low range, expected range. So we also talked about into 3, 400, approximately 1200, and sometimes 20% can exceed out of this. Talked about the 1400 points possible of high-low range. That time it was closer to 17,400. So we said there is a possibility of the low being below around 16,200 to 16,000. And we were surprised that the volatility is even much more than what the volatility that was factored by the market, and it went down to 15,750. So the volatility from the high to low range even exceeded the expectation of the market at that point of time. So it has been slightly more volatile than the volatility that was implied through the options at that point of time. But nevertheless, the close was maintained that it should be within 3 times. That is probably it should be 1200 to 1400 points. It should be from there. So 1200 comes closer to 16,200 levels or so. So this we talked about exactly on 21st between 21st and 21st, because last month the close was 17,200. Only thing, the settlement was around 17,400. So the expectation that it should be the close should be within 16,200. On May 21st, you've seen that the close has been slightly above 16,200, and we have to wait for this month, which could be end of or Tuesday or next week. Probably we expect that the close could be around more than 16,000 based on the volatility that was implied at that point of time. So the overall assessment is that if you use the volatility factor, you can look at the likely range of the market. First of all, you can get to know about the likely range of the market, and also the strategy that you can put in once you know how the trend is likely to be. Now we have also mentioned before that the trend factor called the market normally rallies between 5 to 6% in a normal correction, or falls 5 to 6% normal correction, and then once that level is broken, then we get much deeper fall or deeper rise. So this 5 to 6% correction from 15,700 could mean something like at 800 points or so. So because 5% is around 750 to 800 points, so 800 to 900 points. So we could put, probably we are looking 16.5, 16.6 as area above which if it starts to move, then probably we might have seen some stable bottom, at least a very important bottom we might have seen if, in case if it still starts to rally above the 16.5, 16.6 mark. But right now 16.4 for many days it has not been able to break that 16.4. So let's look at the chart. In trading view chart, if you Nifty, we'll look at the daily chart. So here we see this was one day, 16,404, 16,400, 16,410, 415. So this is a very important thing. And if it starts only to break above this, then probably we could be looking to be on the long side. Then another point that we have also mentioned is this, that is if it starts to have higher lows, and then probably we can say expect a turnaround. So based on this was a low and this was a low, and once this high has been cut, that is 15,984 high has been cut, then probably we can keep this particular low as a stop loss, 15,775. And now you can position yourself. See, this is a low, right? So assuming a low means that once if this high is cut, then in that case this can become a pivot low. So 16,262, I think you should keep 16,262 for a likely fresh buy. That is above 16,262 can come a rally. So 16,262, keep this figure. If it again starts to climb above 16,262, then eventually this time it can break 16,400 decisively. It can break 16,400. So right now itself, if it's above 16,262, you can put today's low as a stop loss and trade. Now today's low is 16,078, right? So 16,078 is the stop loss. So decent stop loss of 180 points on for a daily time frame. So you can look towards on the long side above 16,262 and keeping 16,078 as a stop loss. Okay. Assuming that if it is able to get itself above this particular level of 16,262, then there is a good chance that the rally can go from here to the Fibonacci levels of 38 point. So this is stopping at around this level. So good chance that it can go to 16,635. That is why that is what I said as a probable area of very important resistance. It could be. So 16,635 can be a very important level for the market. So 16,262 if itself it is cut, you can take a risk, keeping 16,078 as a stop loss and look towards moving towards up to 16,635. So let us see how this week, the settlement ends and also the month end, and then we can take a call regarding what is the likely strategy that we can put. So for the time being, the strategies that we reviewed for the month of May, the suggestions that we gave for Nifty positions have turned out to be overall okay, except for the butterfly, which we'll see on Thursday what happens. So now we will look at the Bank Nifty. Okay, Bank Nifty also, generally speaking, now we talked about a fall, which could be something like a so that time the option price was around 650 points or so. We talked about a likely fall which could be around 2,000 points. Also 33,000 is a possibility, because last time we were at around this level, 26th, 25th, 26th, around this place. No, it was around this. So we talked about 36,404, and it can easily slip below 34,000. That's what we said based on the option price. And based on the trend, said no, the close can be closer to 34,000 and it can slip below around 34,000 to 33,000 is a likely area. And right now it's now going around closer to the 34,290, which is what the option price indicated, that 85% of the time it can close above this particular rate. So that is what the illustration is. And right now it looks to be obeying that particular possibility of the market being above the volatility implied by the option price. So right now Bank Nifty also all the strategies that we gave regarding the butterfly, regarding the call put spread, all those things have worked out even for Nifty option. So right now in this case the view is that it is not able to cross this particular level. If you see 34,819, so it needs to get itself above 34,819 before we can see some meaningful movement in the market. And so then after that there is a chance that as we said about a possibility of a 6%, that is around 2,000 points. Already it has come, see 35,000 approximately. If you look at this 33,000, it should be around 33,000 into 6%. If we keep 33, that is 34,918, 35,000. It's very closer to that, 34,000. So very decisive break about this particular level of 34,820 to 850 could probably give an impression of a slightly bigger rally that can unfold as far as Bank Nifty is concerned. So you can now be on the long position implied by a higher bottom from this bar compared to this particular bar. So right now we are looking towards on the long side of Bank Nifty, and suppose if it starts to rally above this particular high, then this particular low itself can become a stop loss. So keep a watch on the overall trend of the market. And right now there can be some dips before it crosses above. So only thing is that we need to see some more. See, in the case of Nifty and Bank Nifty also, we said only if it is crosses 16,262 again now for fresh entry. Right now those who are already long in this position can hold, keeping this particular low as a stop loss. So right now the stop loss is 15,775. So any dip you buy, you can keep 15,775 as a stop loss and buy. Okay. If it cuts at 15,720, 730, then very highly good chance that it can go up to 15,100 levels or so. So the overall situation in global markets is precarious now, because the S&P normally the 20% fall from the peak, that demarcates that implies a very important support. Now S&P has come down 20% from the peak. It was 3850 or so was the it should be the 20% from the peak level. It just came 2 times around that level and tried to bounce back from that. And right now it's going at 3920 levels also, just on a negative spree right now as we see the opening. So probably we could expect some sort of a correction, further fall in Indian equity markets also tomorrow, based on what's happening as far as the S&P is concerned right now. So this is the overall situation right now, and after Thursday we will review the strategy for next month. Now we also talked about the intraday commodity trading. In the case of equity market, we have already said about intraday trading from various perspectives. One, what we call the opening range breakout, ORB. The first 15 minutes candle breakout we suggested, then gap, then we suggested wait for a correction on along with the trend, wait for the correction, and once 15 minutes or 30 minutes bar high is cut, if it is a gap up, then again go for a log. So these are the two strategies we had highlighted. And the third strategy also we said, no, you can use a 330 bar low or 330 bar high also to go long or go short. So that is another strategy that we have suggested. That earlier we had discussed about open is equal to high, open is equal to low. That strategy also has been discussed. So around 3 or 4 important concepts of intraday trading methodology we have discussed. Now what happens as far as commodities is concerned? The commodity in the case of equity markets, the open range, because the market closes and then opens the next day, there's a considerable amount of time. So the ORB concept, the opening range breakout, is more established in equity markets and particular indices also, and also the gaps, okay, so which is more common for markets which are shut and open. But whereas in the case of commodity markets, it's normally, except for the time till 1:30 in the night, the US market is open, so normally very hectic trading takes place up to that. So generally there is a dull period from 1:30 till European time opens, which is around 12:30 or 1. So that's a dull period of time where we should not try to force ourselves into any type of technicals. So generally that's a time that is to be avoided, and more or less we should look towards indicators working after the European time opens till the US time closes. So that's the best time, and the more and even better amongst the time is to look towards the US open time. So US open time, 2 different time periods. So right now it opens around, I think, 7 o'clock or so it opens. So we have to see how the breakout takes place first of all in the 7 o'clock time. Around that 7 o'clock time, what is the first 15 minutes of opening as far as the mark there is concerned. So there also first we will look at the S&P, then we look at the gold and crude, because that we can use it for the Indian markets as well. Then second thing that we have very important as far as intraday trading is concerned, see, you should define your objectives very clearly. Okay, so you should have a very systematic plan. Systematic plan in the sense that one is that the system that you should have. Okay, what sort of system that you are going to use? Okay, it could be trend, non-trend, or whatever it is. So let us say we're going for a trend. In this, what is the technical tool that you're going to use as far as trend is concerned? It could be moving average, it could be super trend, it could be channel breakout. So these are some trend following methodologies that are used. So you can select one amongst these, moving average as super trend, channel breakout, MACD. So these are all trend following systems. You can take one of those particular indicators, then do the back testing, then look at what is your time that you can spend for execution, or probably is there any system which you can handle, you can use it for execution, for both for alerts as well as for triggering orders. So that you need to explore that possibility, which are available now in various places. So the system, the trend, in the trend, moving average, super trend, channel breakout, MACD, all those things are there. Now then after that we have to look at what is the time frame that you are going to use. So what is the time frame. Okay, so it could be in the case of it could be 15 minutes. Okay, it could be 15 minutes, it could be 1 hour. Okay, it could be even daily. So there are different time frames that that you can choose to handle. What you have to do is that whichever trend following system that you have taken, okay, you need to backtest in these time frames and get a confidence that how it is performing. Okay, so the performance parameters then can tell you that what is the overall profit that you are making, then number of trades that it takes, then winning to loss trades, then the drawdown that's there. Okay, so these are important performance parameters that you need to look at to make it yourself which is comfortable for you. But when you look at any of the 10 following systems of different time frames, generally speaking, the overall idea or the concept must be is not on the win or loss percentage, because most of the time the bar charts and candlestick charts are also quite choppy. So there's a chance that you will have a percentage of winning which could be even less than 50%. It could be only 40 to 45% could be the winning chance. That is, if you do 10 trades, only 4 or less than 5 trades will be successful. So, but that should not deter you. What is very important is what is the overall profit that you are going to make, because the entire idea is to let the profit run. So what any trading ideology that you decide right now should be to help you to have maximum amount of profit. So you should let profit run, cut losses. So any system which is now you're using, generally speaking, we should be in a position to give you that. So we talked about some of this what we discussed, and it could be pivot high low breakout, it could be, or it could be the pivot formula calculation that you can use. So depending on whichever that you want to use, we should allow the profit to run and we should cut down the losses. So this is the basic premise on which, and you should be in a position to bear patiently for some time and be consistent. That means at least a 3-month time you should not give for any system to work. And mostly you will make profit. Maybe one system at some point of time can give more profit, some system can give lower profit at some stage. Fine, that doesn't matter. So overall you should be like this. Okay, so this is the with this idea in mind, now let's look at the commodities. What type of strategy that you can probably use. We talked about so many things: moving average, MACD, also super trend, channel breakout and all, and time frame. So generally what we have seen is that as far as international price is concerned, say let us say gold, crude. Okay, and you need a simple system. See, we can always put in a combination of various indicators, work out something, probably yes, but then you should have the somebody at the retail side. We will have difficult to implement all those things because we can't be glued to the screen. Even if we get a signal, then to translate it into buy or sell orders, all those things will be difficult. So the slippages will not be working in our favor. So we definitely need some sort of a programming, and that program should be in a position to both alert and execute trades automatically. So only then you will be a successful trader in present day circumstances. Okay, so that you have to keep in mind, that otherwise you should only be looking towards long-term trades where probably you can definitely get some time to execute your trade. Okay, so you should choose one which is comfortable to you. Okay, whether you are in a position to execute the system, you have a system which does it automatically, or you have to do it yourself. So probably there will be some lag in your execution and all those things, but still, despite that, whether you will be able to win, that will decide your time frame. Now I am just looking at somebody who has the ability to execute it quite fast, or has a system to execute it. And in that case, the gold and crude, let us say, you can just first of all let us say two systems that we take: super trend and probably channel breakout, let us say. Okay, when I say channel breakout means, let us say if it just breaks below the lowest low of the last 20 bars, in a time frame which could be 5 minutes or 15 minutes or whatever it is. So in, let us say I'm taking a 15 minutes bar chart, and in the 15 minutes bar chart we are using our candlestick chart, we are using a super trend, or we are using a channel breakout. The channel breakout in a 15 minutes, let us say we put it at 20 time frame thing, that is in the 15 minutes time frame it should break the lowest low of the last 20 bars of 15 minutes, okay, for a short position, and it should break the highest high of the last 20 bars of a 15 minutes time frame to go long. So that is the channel breakout. Super trend, we will use the parameters 10-3. Okay, so if we do this consistently, then in that case are we getting money, okay, whether we are getting for 1 hour or for 15 minutes. If we make money, will it be able to beat a buy and hold strategy? Buy and hold strategy means, let us say at a particular point of time you bought gold, let us say in January this year. Now if you have been just a blind buyer in January, what is the result right now? So whether the system that you are going to adopt, say 15 minutes of either of this or this, is going to help you to get much more than what probably a buy and hold strategy would have given you. If that be the case, then you look at the number of trades and execution capabilities, all those things. So in the case of gold and crude, you can experiment and look towards a super trend system or a channel breakout of 10-3 on a 15 minutes bar. So as an illustration, we'll go and look at it now. So let's say gold. So this is gold, and this is on a daily chart. The daily chart, it is right now on the buy side, because you can see this pivot being broken, and higher this is a bottom and this is a bottom, so higher bottom is formed. So generally in the bar chart, probably our long position could have come even above 1824, and we should be long above 1824. So generally speaking, the result is should be now for us to see. Now let's look at the 15 minutes chart. So this is the 15 minutes chart. Okay. Generally gold is quite slightly choppy. Okay. Now let us say we are using an indicator super trend. So this is a super trend indicator, which is the on the 15 minutes time frame, and this is based on 10-3. Okay, so we have to follow some system uniformly. So what's happening here is that we are in the last one day or so, probably here we would have gone long. So here we would have gone long. Okay, so this is the place where you would have gone long, let us say. Now after that, this is the place where you would have exited and gone short. So this any short here we would have gone removed it here, and long we would have got it here, and you would have removed a short position here, and then any short here we are removing it here, and then now it's on the upside. So there's a very simple basis of doing things. So for those who are not finding it quite difficult to understand other complexities of pivot breakouts and other things, we can use this simple calculation of a super trend system on a 15 minutes chart, and in a 15 minutes chart you can use a 10-3 time frame. So once it is above the say here it's a red line, so above this particular line you can be on the long side, and below this particular line you can be on the short side. Now if you find there are 2-minute trades, you can look at the 1 hour chart. In 1 hour chart, you can be on the long side. So here it was long, and this was closed here. So short here was closed somewhere here, and then from here you are on the long side, and from 1824-25 you are still on the long side, and every time now it just falls, it takes some support here, and looks like going up right now. So this is based on the simple methodology of going on an hourly chart super trend time frame. So either you can use in a 15 minutes or 1 hour chart, depending on your ability to handle it. That's all. That is your time that you got to see and make adjustments. So here in this case, the less time you need to spend, because it went long on 18th May itself. So 18th May itself, and no, till now, no, we are still on the upside for 4 or 5 days. So to that extent, it's quite comfortable, because the number of days it spends there probably gives you more time to execute the trade. So you can see still no, any system that you do probably will be consistent. If you do, it will be profitable, and you have to back test that. No, if you're doing this based on this indicator over a period of time, how much of money it makes. Okay, so what we have seen is both this 1 hour and 15 minutes chart definitely helps you to make money using a super trend. So you can use this particular system there. See, another thing is that the candlestick, if you look at it, generally a low is a very choppy, this one. So probably to get better clarity, you need to probably look at other forms of charts, whether other than bar and candlestick. We have to look at other charts which can have a good amount of trend following system in place. So there are different I think one is they called the Aiken Ashi. So here if you look at it, so here got Aiken Ashi, Renko, line break, Kagi, point and figure, range, all those. So you can try and use some other thing which can probably give a little less clustered than what we see here. So let's say we use the Aiken Ashi, probably so this is a little more clear chart compared to what we normally see. This is a little more clear, though the end result may not be that much different, but still I think the chart can be much more cleaner and more organized compared to the candlestick chart that we just now saw. So probably you can use this particular chart also to look towards this instead of bar chart. Then so you must understand all those things. If you go to the glossary, you will definitely have it in the Google glossary. You will have. So this is the this is on the Renko chart, the 10-3 super trend itself on the Renko chart. Probably you can use it in 15 minutes, but I don't know whether you're getting it in 15 minutes. I think it's only available for in a daily chart as far as Renko is concerned. So we will just use the Aiken Ashi itself or line break. Okay. Here also it's coming only daily chart, so we'll just leave it there. So we'll I think those are advanced to be paid ones. So Aiken Ashi right now if you look at the daily chart, I think you can see it's a little more well organized compared to the daily chart. So we expect the any rally to take which goes up probably can meet resistance close to 1910, 1912 on a daily chart. So we are now looking more only towards the 15 minutes time frame. So 15 minutes time frame in this is still on the upside, and the same thing if you put it in the candlesticks back to candles. This is the chart. So probably the Aiken Ashi and other things looks a little more cleaner because of the trend lasting, looking to last for more time there. So this is one strategy that we can probably use it here. And the other one that we look at is the normal pivot support resistance itself. So what are the pivot support resistance for the day? So we'll remove this. So today's indicator pivot points. So this is a pivot point strategy here. So this is right now it is trading above the average. So let's say. So here, if you look at it, now this is trading above the average, so, and it has also crossed R1. So since it has crossed R1, for the day, you can now look towards be on the buy side itself. Keep this particular low as a stop loss. This is the 1853. 1853 we can keep as a stop loss and trade. So this is based on the pivot. So you can use the super trend trade, or we can use the pivot point system of the formula based pivot point system, because there's another one which is called the pivot point high low situation. So right now we are using the formula based system. So this is another system. So a 15-minute time frame, a super trend or channel breakout, or we can use the pivot point daily pivot point based this calculation that we can use. So this is one system that we can use. In the case of crude, again, if we go to the WTI crude, again the same pivot point formula calculation we can use, or we can use a super trend. Now so this is a 15 minutes, and here also we can use the in the 15 minutes or 1 hour we can use. Okay, so this is the 15 minutes time frame super trend as far as the crude is concerned. If you feel that no, the system is a little difficult for you to handle because of faster executions, no, both on the long and short side, you can look at the hourly chart. Whichever comfortable for you, you can use it. So here again an hourly chart, now right now we are on the long side, so it happened to be on the short side here. Now again, so the major issue in all these systems generally is the overall choppy nature of the market. So overall, no, these things are little choppy when compared to I would say, the using a general pivot point cut. When I say pivot point cut, see, let us say this is hourly chart. So let's say a 4-hour chart we use. So you can see this is much more clear. This is slightly much more clear. So in the case of a 4-hour chart, now this is a pivot point low, and this pivot point low has been cut, right? So this pivot point low is cut. So we are still on the shorter side of the market as far as 4-hour strategy, and it is also in the case of 4 hours. It is still below the super trend. So to that extent, we are now we are looking at on the shorter side, because in commodities even hourly and 15 minutes maybe more choppier than the 4 hours chart. But despite that, if you still use the 15 minutes time frame with a super trend or channel breakout, both in terms of crude, both in case of crude oil and gold, it is still a winner. Only thing is you will have at least 2 to 3 trades per day. You will have at least definitely 2 trades. It may be even 3 trades per day. So if you can handle the question of doing 2 or 3 trades per day, then in that case you can use the super trend even a smaller time frame. Now whether it is super trend or channel breakout, the smaller time frame, if you use it 15 minutes, 30 minutes or 1 hour chart or so, the overall profit that you get can be more than just by buying it on a particular day and holding it for a considerable period of time. So to that extent it will be a winnable situation. But only thing, you should not put any pause on anything, because sometimes the most profitable trade you may miss it. In order to ensure that you don't miss on any profitable trade, you should continue to stay trading, which means that you need a proper system and execution system which can take care of whatever that you have already designed and back tested. Now in this case, if you are looking at a 4-hour chart, you can use a 4-hour chart. So we have to just we are not back tested for the 4-hour chart. But now in the recent periods, crude oil also has become quite choppy after the recent trends that have happened. So we have seen both up and downs taking place as far as the crude is concerned. So this is one methodology that you can use it, because sometimes when in a choppy market, probably any trend following system has a chance of making loss. But still you trade with patience, over a period of time, that choppiness will also yield you to good profits. Okay, because we do not know when it will be choppy, when it will not be choppy. So to combine any strategy where in order to avoid choppiness, and then when it is choppy you do some other system, when it is not, it's very difficult, because to find out when it is going to become choppy, all these things, by the time you find out, the trend will pick up. So just follow a particular system, and here we are clearly highlighting that no, just no, test it, or doing small trades. In the case of gold and in the case of crude oil, use a 15 minutes super trend system of 10-3, or a channel breakout of a 15 minutes 20 period channel. It will work. If you find it difficult to do it in 15 minutes time frame, you do it in a 1 hour time frame, it will work. Otherwise, you look at the pivot point high low, pivot point break. That is what we have done with the formula calculation that you can use. So now let us say we'll go back to that. So right now it is above the, okay, so it is above the PP, but still, I would say that it is just touching that PP central pivot point range. It has to cross this particular high, for it to really get back on a positive mood for the day. So we need a cutting above 110.20. So only above 110.20 we can say, go long, keeping a stop loss below S1, which is 108.50. So today we have seen that both sides are happening. First, it fell below the, it just opened, and it opened below the pivot point. So now it was around, I would say early in the morning today at 3:30 or so in our time. So here it was a fall. Okay. So after that, it took some support here, and then again started to fall here. So now it has any rally which is going to be above the central pivot point range is going to be definitely a positive factor for the market, and it can start moving up. So right now we are keeping a long position which should be above 110.20, a long above 110.20, and a stop loss below 108.45. So this is what we can keep it for the day. And yesterday, if you see, again the movement was restricted to R1 here, and mostly it was the PP range. It was closer to the PP range. So it traveled only between R1 and the central pivot point range. So there was a resistance quite closer to the R1, and it did not penetrate R1 in any decisive manner, and then it fell back closer to the pivot point range. So we could have either gone long above the pivot point. Whenever it went above the pivot point, this is PP. So anything which is above the central pivot range, which we have illustrated earlier before, we can definitely be on the long side, and probably keep the lower position below this particular point low, which happened below the PP. When it crossed above the PP, whatever low that happened below that can be kept as a stop loss. Okay, so then it moved a little higher, and then it went up to the R1 where we could have taken profit, or probably we can keep this low itself as a stop loss and see whether we can get more rides, which did not happen yesterday. So today, it is not a very decisive cut above the PP here. So once we get something above the 110.20 levels, then we can go long then, and keep 108.55 as a stop loss. So we can use one of all this thing which we have already highlighted. So it is up to your comfort to decide about which type of trading system that you want to adopt for commodities. Thank you. So any questions you may ask now. So on Friday we will look at the what probably we can do for June settlement in Nifty. So thanks for your participation. Good night.